Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the economy in India, and specifically to talk about the fact that the Indian Rupee is now trading at record low levels. Over the past 5 years, the Indian economy has been growing, and in fact, it took over the UK as the fifth largest economy in the world recently. But despite that, the value of the rupee has been falling constantly over the past 5 years. And one of the reasons for this is because a lot of countries that are doing trade with India are refusing to actually do that trade in rupees. They want to do it in US dollars or euros or Russian rubles or Chinese yuan or some other currency. So in today's video, we'll take a look at what's been happening with the exchange rate of the Indian rupee against some of the major currencies that it trades with: the US dollar, the Chinese yuan, United Arab Emirates dirhams. We'll have a look at what's happening with India's balance of trade, the difference between the cost of its imports and the value of its exports, because India remains as a net importer. And so when the value of the rupee falls, that means that everything that it's importing becomes more expensive. And that's now driving up inflation. And the figures that have been published for September show that inflation has come in at a much higher level than expected. And it's now well above India's target rate of 4%, which means that the Indian central bank may have to increase interest rates to bring it back under control, and that will have a detrimental impact on the economy. And then finally today I'll wrap up with my summary as to what I think is happening in the Indian economy right now, why the rupee is continuing to fall in value, and what the impact of this will be on the Indian economy over the course of the next 6 to 12 months. But before we get started on all of that, I'd like to say once again, thank you so much to everyone that's supporting the channel. If you're a long-term supporter, either through Patreon or YouTube membership or Buy Me a Coffee membership, thank you for that long-term support. Really helps to keep me motivated. And if you've bought me a coffee or sent me a YouTube super thanks recently, thank you so much for the time and the effort and the generosity. It really means a lot to me. So as I said at the start of today's video, India is now ranked as the fifth largest economy in the world. And before we have a look at the table, can you name the countries that are the top 4 in that order? This chart shows the world's top 10 economies for 2024. And as you can see, right at the top of this list is the United States, with projected GDP for 2024 of just under $29 trillion. The second largest economy is China, with projected GDP of $18.5 trillion. Number 3 on the list is Germany with just under 4.6 trillion. Fourth is Japan with just over 4.1 trillion. India comes in at number 5 with 3.94 trillion. The United Kingdom is number 6 with 3.5 trillion. France is number 7 with just over 3.1 trillion. Brazil comes in at number 8 with 2.33 trillion. The forecast GDP for Italy is also 2.33 trillion, but it's ranked at number 9. And number 10 on the list is Canada with GDP of 2.24 trillion. And I think the important thing about this table is to look at the actual size of each of these economies. The value of the economy in the USA is more than 55% larger than it is in China, is more than 6 times larger than the economies in Germany and Japan, and more than 7 times the size of the Indian economy. And the reason for highlighting the fact that the USA is so much larger than the other economies in the world is because there's a direct correlation to the level of trade in the US dollar. This chart shows the top 20 traded currencies in the world. And one thing to note about this chart is that the percentages here add up to 200%. And the reason that they add up to 200% rather than 100% is that every exchange rate transaction involves 2 currencies. So it might be the US dollar trading against the Indian rupee, or the US dollar trading against the Russian ruble, or the Russian ruble trading against the Indian rupee. And you score on both sides of that equation. And what this chart shows is that the most traded currency in the world is the US dollar, with 87.62% of 200%, which is roughly around 44% of all trades that are being undertaken. The second most traded country is the euro, which is used by 19 countries in Europe. And the euro represents around 15.5% of all currencies that are being traded globally. The Japanese yen comes in at number 3, with around 10.5% of all trades. The British pound number 4, with around 6.4% of all trades. The Australian dollar comes in at number 5 with around 3.5% of all currency trades. The Canadian dollar is the 6th most traded currency in the world with around 2.6% of all trades. The Swiss franc comes in at number 7, and interestingly, despite the fact that China is the second largest economy in the world, the Chinese yuan is only ranked as the 8th most traded currency, and around 2% of all currency trades are done with Chinese yuan. The Swedish krona comes in at number 9 and the Mexican peso number 10. Now, as you can see, the Indian rupee is not ranked in the top 10 traded currencies in the world, despite the fact that India has the 5th largest economy. And if you look down this list, you can see that the Indian rupee is actually ranked at number 17. It's actually ranked 6 places lower than the New Zealand dollar, and New Zealand has a population of around 5 million people, compared with 1.4 billion in India. And you can also see that the rupee ranks below the Turkish lira, and the Turkish lira has been one of the worst performing currencies over the past couple of years. But it is interesting to note that the Indian rupee ranks ahead of the Russian ruble. One of the reasons why the value of the Indian rupee is really important to the Indian economy is because India is still a net importer. It has a negative balance of trade. This chart shows the balance of trade for India over the past 12 months, and the scale on the right hand side of this chart is shown in billions of US dollars and goes from 0 at the top to minus 35 billion at the bottom. And what this chart shows is that in every single one of the past 12 months, India has been running a negative balance of trade. And the balance of trade basically measures the difference between the cost of all of your imports, so what you're paying out, and the value of all of your exports, so what you're receiving in. And as you can see, over the past 5 months, the deficit on the balance of trade has been increasing. And the most recent figures show that the balance of trade in August 2024 was negative 29.7 billion US dollars. And if we widen the scale of this chart to show what's been happening over the past 5 years, you can see that the situation has actually been getting worse. The scale on the right-hand side still starts at 0. So over the past 5 years, India has only had a very brief moment when the balance of trade moved into positive territory. And that was during the COVID-19 lockdown, when everything actually shut down. So India reduced the amount of things that it was importing. But since June 2020, there has been a consistent and increasing downward trend here. So India is constantly now spending more than it's earning, and that represents a major problem when both the value of your currency is falling and all of the contracts that you're doing with overseas countries are denominated in foreign currencies. Now, in terms of establishing exactly what India is importing, this chart shows a breakdown of the largest categories of imports. And what this shows is that the single largest category, representing 33% of all imports, is fuel, predominantly oil. And that in 2023, India imported over $220 billion worth of oil. The second largest category, representing 11%, is electrical and electronic equipment, which equated to $76 billion US dollars. The third largest is precious metals and stones, predominantly gold, and that also accounted for 11% of imports in 2023. Machinery, nuclear reactors and boilers came in at 8.5%, around $57 billion. This chart shows India's top 15 trading partners for both exports and imports for the 12 months ended March 2024. And what this shows is that India's number one trading partner is China, which represents $15.1 billion worth of exports, but almost $94 billion worth of imports. The USA is the second largest trading partner, representing $70 billion worth of exports and $37 billion worth of imports. The United Arab Emirates comes in at number 3 with $31.7 billion worth of exports and $43.1 billion worth of imports. Russia is number 4 on the list with $3.8 billion worth of exports and $55.5 billion worth of imports. And number 5 is Saudi Arabia, another oil country, with $10.4 billion worth of exports and $29.1 billion worth of imports. And this table shows a breakdown of the value of the exports and imports for the year to March 2024. And what this shows is that in terms of physical goods, India exported $437 billion worth of goods, but imported 677, which is a net deficit of $240 billion. Now, in terms of services, this is the strongest part of the Indian economy. It's a people business. They can offer lots of great services to all countries in the world. And in the year to March 24, India exported just under $340 billion worth of services and imported 177 billion. And that means that India had a net surplus for services of 162 billion. And the overall position when you add together physical goods and services was that India exported just under $777 billion worth, and they imported just under 855 billion. And that represents a net deficit from India's perspective of $78 billion. This chart shows the movement in the exchange rate between the US dollar and the Indian rupee over the past 5 years. And what this shows is that 5 years ago, one US dollar was trading for around 70 Indian rupees. Today, it's trading for more than 84, which represents a deterioration in value of the rupee over the last 5 years of around 20%. And interestingly, you can see that there was an acceleration in the deterioration of the rupee after Russia's invasion of Ukraine, which commenced on the 24th of February 2022. And if we widen the scale of this chart to show what's been happening over the past 10 years, you can see that there has been a continued deterioration in the value of the rupee throughout the last 10 years. And this represents a major problem for India because it's importing a lot of goods, and many of those goods are priced in US dollars. This chart shows the exchange rate between the Chinese yuan and the Indian rupee over the past 5 years. And what this shows is that 5 years ago, one Chinese yuan was trading for 10 Indian rupees. Today it's trading for more than 11.84, which represents a deterioration in value of the rupee over the past 5 years of more than 18%. And if we zoom in and have a look at what's been happening over the past 12 months, you can see that since the start of July, there's been a rapid and extreme deterioration in the value of the rupee against the yuan. And this is now a major problem from India's point of view because its single largest trading partner is China, and it's buying a huge amount of imports from it. And all of those imports are becoming relatively more expensive every time the value of the rupee falls. This chart shows the movement in the official rate of inflation in India over the past 12 months. And what this shows is that 12 months ago in October 2023, inflation was sitting at 4.8%, which was above the target rate of 4% set by the Central Bank of India. It then rose in November and December to a high of just under 5.7%. However, at the start of 2024, inflation started to come back under control, dropping to 5.1% in January and February and 4.8% in March, April and May. It did bounce up to 5.1% in June. However, in July and August, it actually fell below the target rate of 4%. However, the figures for September show that inflation has now spiked back up again and is just under 5.5%. Now, obviously, this is of concern in itself. However, if we now have a look at what's happening with food inflation, this really highlights the concerns in India today. 12 months ago in October 2023, food prices were increasing at a higher level than general inflation at 6.6%. The rise in prices accelerated to 8.7% in November and 9.5% in December. In the first 5 months of 2024, food prices increased above 8%, and in June the rise in prices grew to 9.4%. In July and August, the increase reduced to 5.4% and 5.7%. However, in September, there's been another spike in food prices, which have increased year on year by more than 9.2%. And of course, this rising cost of food prices comes at a time when the rupee is continuing to deteriorate in value. And if that continues, then it's likely that we'll see continued price pressure and further rises in inflation. So what's the summary and conclusion today? Well, I wanted to post this video because I think what's happening with the Indian economy and the Indian rupee is absolutely fascinating. Over the past 5 years, the Indian economy has been growing rapidly, and it recently overtook the UK as the 5th largest economy in the world. And India has recently also overtaken China as the largest country in the world. It's now got the biggest population. So from a big picture perspective, things are going really well for India. However, one of the problems that it faces is that there aren't many countries in the world that want to use the Indian rupee as the currency that they trade in. So the business that India is doing is being denominated in other currencies, predominantly Chinese yuan, US dollars and United Arab Emirates dirhams. And the problem that that's now presenting for India is that there's no demand for its currency. And over the past 5 years, the value has fallen. And the reason that that's a major problem from India's point of view is that it's a net importer. It's paying more for all of the goods that it has to import than it's receiving for all of the things that it exports. And it's paying for all of those items in foreign currency. And as the value of the rupee declines, that's putting pressure on prices. And this is a classic situation where if this continues over the long term, it will drive up inflation in the Indian market, and then that will cause problems in the Indian economy. Now, the finance ministry in India has tried to address this. They've said that they want to internationalise the rupee. They want lots more countries to start adopting the rupee and to be able to accept payments. But the problem that India faces is that there isn't a great deal of reciprocal trade with a lot of the countries that they're buying things from. So if they had an equal amount of business, then the other countries may be happy to take rupees and then hold on to them and then use those rupees to buy things back from India. However, that generally isn't happening, and I think a good example of this is the trade with Russia. When Russia first started doing business with India, Russia said it wanted to deal only in Russian rubles. Now, India said that it wasn't prepared to do ruble business and wanted to deal in Indian rupees. Russia said exactly the same back. They didn't want Indian rupees. And so they've now started doing business in Chinese Yuan and UAE Dirhams. So that's great from China and the UAE's perspective because it's increasing the demand for their currency. But it isn't good either for India or for Russia. And we've seen the value of both the Indian rupee and the Russian ruble falling over the last couple of years. And this is a major issue, I think, from India's point of view, because it's difficult to be able to establish your currency as something that is a global reference point if nobody wants it. And I think that's a problem that Russia have faced since the invasion of Ukraine. President Putin came out immediately following the invasion and demanded that all unfriendly nations pay Russia in rubles. Most of those unfriendly nations refused to do that, and so they had their gas supplies and oil supplies switched off. But if nobody wants to deal with your currency, it's really difficult for you to be able to force people to do it. And the only way that India will really get around this point is if they start having a lot more things that people want to buy. Now, the main thing that overseas countries are buying from India are services. It's a people-orientated economy. It's got a lot of people and it can offer lots of exciting things at a relatively low cost. So if India can grow its service business over the next 5 years, then that potentially means that it could go into a position where its balance of trade moved into the black. It actually was exporting more services than it was importing goods. If it gets to that point, and if a lot of those services are with the countries that it's buying things from, so if it can do more business with China and the USA and the UAE, then maybe those countries will start to accept some of their contracts in Indian rupees. But as we saw earlier in the video, despite the fact that India is the 5th largest economy in the world, the rupee ranks at number 17 in terms of international trade in currency, and it only represents around 0.5% of all trades that are being undertaken. So the rupee has got a long way to go for it to become an established currency, and realistically, it's not likely to happen at any point in the near future. Certainly not in the next 12 to 18 months, but probably not in the next 5 to 10 years. And this is going to represent an ongoing problem for India because whilst it remains as a net importer, and it will do because it has to buy in fuel, so it's buying in lots of really expensive items, that means that all of those contracts will continue to be done in overseas currencies. That means that there won't be any demand for the Indian rupee, and so it's unlikely that the value of the rupee will rise. And I think one of the interesting points is that the Central Bank of India have actually been supporting the value of the rupee over the past 5 years. They go into the market and manage the exchange rate. So against the US dollar, they were trying to keep it below 84 to 1 US dollar. That got breached recently, and I think that shows that there's pressure on the Indian Central Bank in terms of how much foreign currency they've actually got to be doing those trades. And it would be really fascinating to see if they stopped all of those practices, how low the value of the rupee would actually move to. Would it go to 100 against the US dollar? I think there's a chance that it possibly could. But the overall summary of today's video is despite the fact that the Indian economy has been growing rapidly over the past 5 years, and it's become the 5th largest economy in the world, there is still very little demand for business to be done in Indian rupees. That's resulted in a fall in the value of the rupee over the past 5 years, and this is now putting pressure on the Indian economy because India remains a net importer, and when the value of your currency falls, that's bad news when you're importing items. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.